Hey, what's going on everyone? It's Griffin here and I'm back from the short break that I took from YouTube, but trust me guys, the break was well worth it because I've actually been working on a blog/website where I'm gonna be complementing my videos on YouTube with some blog posts that are gonna bring you a lot of value. Basically, I was looking through my YouTube channel and the videos that I've already put out onto the channel, and I realized that there was a lot of value in those videos kind of just sitting on YouTube, not getting the proper exposure. And for that reason, I thought to myself, how exactly could I kind of revamp those videos and get more exposure to them? So I thought I would make a blog/website where I could put my videos on that blog, but then also translate the videos and the content into a readable blog format for people who like to read more than watch videos. So again, that is why I took a short break from YouTube. It was only about a week and a half, but I highly encourage you to go check out the website. It has the URL griffinmilks.com, super easy to remember, and I'm also gonna put a link down in the description for easy access. And keep in mind that the website really is a work in progress. I only have a handful of articles up on the website as of right now, but I'm gonna be actively adding new blog posts on a weekly basis, probably even more than YouTube videos. I'm gonna try and release 2 YouTube videos a week moving forward, and probably about 2 to 3 blog posts per week. Also keep in mind that a lot of the content is going to be both on the blog and on the YouTube channel, but some of it is going to be exclusive to one or the other. So make sure that you subscribe down to the channel and bookmark the website if you're interested in topics such as saving, investing, personal finance, credit cards, and a variety of other topics. All right, so now that we have that out of the way, let's cover what you actually came to the video for, and that is Canadian stocks that pay high dividends. I'm making this video today because I actually made a poll on my community page on YouTube, and 73% of people said that they'd like to see more stock, dividend, and investing videos. So wish granted, here we are. We're gonna be looking at 5 different Canadian dividend stocks that I think are worthwhile holding in your portfolio for long-term steady dividends. I myself hold all 5 of these dividend stocks in my own personal investment portfolio, and if creating passive income through dividend investing is something of interest to you, then make sure to give this video a like. It really helps me out with the YouTube algorithm and makes this channel grow. And just before we dive into the actual specifics of the 5 different dividend stocks, I just wanna mention that the 5 stocks I chose for today's video, I chose them not only for a healthy dividend yield, but they're also stocks that I think have tremendous potential for growth over the coming years. A lot of new investors can get hung up on those high dividend yields at face value, but a high yield does not necessarily equate into a good investment. For example, if the stock price is consistently going down, even at a high yield, you most likely will not come out on top because your dividends will counterbalance the bleeding capital through equity value loss. A couple other elements that I kept in mind when choosing these 5 dividend stocks was consistent dividend payments over the last several years, as well as consistency in dividend raising over the last couple of years. If you want to know more about how dividend yields actually works, I'm going to be expanding on this topic in the blog post that's going to complement this video. So again, make sure to check out the link down in the description for my blog post. Okay, so enough of that. I promise now we're going to be going over the dividend stocks. The first one being TD Canada Trust, which is one of Canada's largest banks. If you're Canadian, you definitely know what TD Canada Trust is. Once again, they're one of the largest banks in Canada, and most people have done business with them. The stock currently trades at a market value of $71.76 at the time of making this video, and the market cap is 131.28 billion Canadian dollars. If we take a look at some of the other financial fundamentals of the stock, we can see that it currently has a price to earnings ratio of 11.47, which is great for the financial services industry, and it has a dividend yield of 4.1%, which is awesome. Now, this 4.10% dividend yield translates into an actual cash value of 74 Canadian cents on a quarterly basis, or $2.96 annually. So yes, TD does pay out dividends on a quarterly basis, and they recently bumped up their dividend by 7 cents per quarter, which is great for shareholders. Since 2013, TD has been not only paying out their dividends consistently, but also raising them on a consistent basis. So hypothetically, if you own $10,000 worth of TD stock and just held it in your investment account at a quarterly dividend of 74 cents per share, you would receive roughly $414.40 in a calendar year worth of dividends just for holding the stock. Now also keep in mind that this would be in combination with actual appreciation of the stock, which I personally think TD has significant room for growth over the coming years. The second dividend stock that we're going to be looking at today is actually a REIT, also known as a real estate investment trust. These are companies that own and manage a variety of different real estate, and their stock is traded on an exchange. The REIT in particular that excites me and that I've had my eye on for the past while is called Allied Properties Real Estate Investment Trust, also known under the ticker symbol AP.UN. The stock currently trades at a market value of $52.83, and the market cap is 6.143 billion Canadian dollars, so significantly smaller than TD Canada Trust. If we take a look at some of the other financial fundamentals of this stock, we can see that it currently has a price to earnings ratio of 9.41, which is great, and a dividend yield of 3.02%. This 3.02 dividend yield translates into an actual cash value of 13.3 cents monthly, or $1.59 annually. Allied Properties does pay out dividends on a monthly basis, which can be nice for some investors, and they recently bumped up their dividend by 0.03 cents on a monthly basis. Once again, if hypothetically you were to own $10,000 worth of AP.UN and just held it at a monthly dividend of 13.3 cents, you would receive roughly $300 in a calendar year. And also keep in mind here that AP.UN has huge potential for growth. I think that even with the growth trajectory currently, this stock is somewhat undervalued in terms of their actual financials. For example, they have a 3-to-1 ratio for assets to liabilities. They have a really low price to earnings ratio. And overall, the current Canadian real estate market is doing great. Onto the third dividend stock in today's video, we have TransCanada, or TC Energy. This company supplies more than 25% of all natural gas in North America and has a pipeline system that spans more than 97,000 kilometers over North America. What makes this company really solid is they own a lot of assets, including storage facilities, pipelines, and they've also been around for over 65 years and employ over 7,000 Canadians. The stock currently trades at a market value of $69.39 with a market cap of 64.96 billion Canadian dollars. If we take a look at some of the other financial fundamentals of this stock, we can see that it currently has a price to earning ratio of 15.37, which is great for the oil and gas industry. The stock also comes with a healthy dividend yield of 4.32%, which translates into an actual cash value of 75 cents quarterly, or $3 annually. Once again, TC Energy has a nice track record of paying out dividends consistently, never missing payments, and periodically revising their dividend payout. Once again, hypothetically, if you were to own $10,000 worth of TransCanada stock and just held it at a quarterly dividend of 75 cents a share, you would receive roughly $447 in a calendar year. This is a great dividend stock to add to your portfolio, and if you don't own anything in the oil and gas industry, this could be your chance. Hey guys, just a quick pause here. If at any point in time you're enjoying this video and finding value, then make sure to give it a thumbs up. It really helps me out with YouTube's algorithm and helps the channel grow. The fourth dividend stock that we're going to be covering in today's video is actually the highest yielding stock in the video at 5.64% yield. The stock I'm referring to here is CIBC Bank, also known for the ticker symbol CM. The Canadian Imperial Bank of Commerce is one of Canada's 5 big banks, and it serves over 11 million individuals, small businesses, and corporations across Canada, the US, and across the world. If you're Canadian and you've ever been outside of your house, then I'm sure you know what CIBC is, so let's take a look at their numbers. The stock currently trades at a value of $101.94 with a market cap of 45.41 billion Canadian dollars. If we take a look at some of the other financial fundamentals of the stock, we can see that it currently has a price to earnings ratio of 8.95. If we remember earlier, TD had a PE ratio of 11.47. The stock also comes with a dividend yield of 5.67% as mentioned earlier, which translates into an actual cash value of $1.40 quarterly, or $5.60 annually. So hypothetically, if you were to own $10,000 worth of CIBC stock and just held it at a quarterly dividend of $1.40 per share, you would receive roughly $564.48 in a calendar year. Now, I do want to also comment a bit more about CIBC, because if we just look at the actual growth chart over the past couple of years of CIBC, this really doesn't look like all that much of an amazing stock to own, regardless of the high yield. However, over the past 6 months, the stock has fallen by more than 11%, and over the past year, 18%. So less than 1 year ago, however, the stock was trading at over $125. And what's more is that the stock has an earning per share of 12.04, a price to book ratio of 1.3, which is still in good territory. And overall, I think that this stock is due for some positive growth over the coming years because I think it's undervalued. Now, for the last dividend stock in today's video, I could have gone with a handful of different Canadian banks that would have been good options, such as BMO, for example, Bank of Nova Scotia, RBC. All the Canadian banks are really solid stocks to own and pay high dividends, so definitely check all of them out if you're interested, but I didn't want to make this video too boring. That's why I chose a different dividend stock as the last one. I decided the last dividend stock that we'd cover in today's video is Genworth Mortgage Insurance, which now that I think of it, I guess isn't all that much more interesting than a bank stock. The stock currently trades at a market value of $50.51 with a market cap of 4.37 billion Canadian dollars. If we take a look at some of the other financial fundamentals of the stock, we can see that it currently has a PE ratio of 10.81, which again is pretty good. The stock also comes with a dividend yield of 4.04%, which translates into an actual cash value of 51 cents quarterly or $2.04 annually. All right, so just a quick recap of today's dividend stocks. We started off with TD Bank at a yield of 4.10% and great room for growth, followed by Allied Properties REIT that boasts a tremendous growth potential and a nice 3.02 dividend yield. Next up, we had TransCanada Energy with a yield of 4.32% and CIBC stock that has taken somewhat of a dip in recent territories. CIBC had a dividend of 5.64%, which is the highest on today's list. And the last dividend stock we covered today was Genworth Financial at a dividend yield of 4.04%. All right, guys, so that's really it for today's video. I hope you enjoyed the content and I hope you enjoyed the 5 dividend stocks that we covered today. If you're invested in any other dividend stocks that you'd like to mention, make sure to comment down below which ones you are currently invested in. I'd love to check them out and see for myself if they're a right fit for my portfolio. And also, if you enjoyed this video, make sure to give it a like. It really helps me out once again. And if you want to read these videos in a blog format, make sure to check out my new website/blog, which is griffinmilks.com. There's a link down in the description. I highly encourage you to go check it out. And on that note, thanks for watching. I'll see you soon.